Welcome back, everybody, to Markonomics 101 presents Hoot Loot, where you come to be informed, be amused, but never be misled. Today, we're going to have a classroom edition of Hoot University. This is the second time for that, and we're going to go through chart patterns, but it's called the science of investing because there actually is a science to it. And we're going to go through all of that today. Also, we have something called Earn and Learn. And for Earn and Learn, at the end of the program, we're going to give you an answer to a question that was already answered during the program somewhere. So all you have to do to earn the $50 is be a subscriber, which I'm sure you are already, or, my God, that's so unhip if you're not. Or, there's no ors. You have to be a subscriber. That's it. Get the right answer, post it underneath the YouTube posting as soon as it goes up. And we'd love for you to like and subscribe. Please do. And we will be right back with the charts. Welcome back, everybody. Today you're going to learn an awful lot. We're not really doing a presentation on the direction or the anticipated direction of the market as much as we're showing you on an individual basis that there's really a science to this thing. So, Dr. Phil, thank you so much for calling back so quickly. Oh my God, I was like, no, we're not doing all that well after all, Well, physically she's fine. I mean, we patched her up and everything. But last night we had this god-awful fight, and I filled her with helium. Yeah. Over Kansas somewhere. Dr. Phil? Dr. Phil? All right, well, let's go to the charts. I'm sure that he has to think about it because he probably hasn't encountered that as often as some of his other people. Anyway, the Dow Jones now, I'm just going to go through some of the index charts because we always do, but they're not really the crux of the matter here. The Dow Jones Industrials, though, while they're making new highs every day, look at the compression. Okay, you have what looks like a saucer bottom. It's not. That is a pattern that, because it's ascending, okay, any ascending pattern is harder to break down from than up from. So when we talk about a pattern that is ascending, we talk about a pattern that is likely, more than likely, to break down. We talk about a pattern that is ascending or descending. It is more than likely to break up, because once you're descending, breaking up is easier than breaking down and accelerating further. And that's the sort of the layman's terminology for it. So the Dow Jones, the reason we would consider this somewhat bearish is because it is compressing, and it's compressing on lower volume. You see the volume here at the bottom of the screen, and no one's really buying it. Just no one wants to sell it because it's so valuable. It's worth infinite amounts of dollars. Okay. Nasdaq 100, I drew a different type of way of looking at this. Now, here's what I want you to get from this, okay? The Nasdaq 100, now look at the two different moves, okay? There's a move that starts about a year ago at the market bottom. It goes for several months and then is followed by a sideways or downward sloping consolidation pattern known as a flag. Why? Because the movement up is like a flagstaff, and the flag is the flag, that would be up the flagstaff, kind of waving around in the wind like that. So when it's a downward sloping flag, it's a bull flag, because chances are it's consolidating the move that came before it. It's also called a continuation pattern. Continuation meaning that once it resolves itself, it does go in the same direction that preceded it. In other words, things don't go up, 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 up. They go up, pause, up, pause, up, pause, up, pause, and they do the same thing on the way down. And you have like a burst to a different level, and then it just kind of finds its own equilibrium there. And that's how these markets work. Highs above highs, lows above lows, uptrend. Highs below highs, low below lows, lows below lows, downtrend. It's really comes down to that basic of a thing. Now there is a science here, and that's the part I want to get to. Okay, now the Nasdaq 100, what you'll notice here also is that the two up moves are at about the same angle and they're about the same length. So if it were the case that it broke up, it would probably do something, well, roughly similar. But I don't think that's going to happen because of the bear flag. It's going to be really tough to get this thing higher. Okay, now I put the Nasdaq 100 weekly here for a reason, and that is the ascending wedge that you see there in red. How are we going to possibly break out of something like that? Number one. Number two, what you'll notice is that there is a long-term, this is a 20-year graph, by the way, or weekly, I'm sorry, 5-year graph. And you see the long-term trend line in green. Look how far above its trend line it is. Look how exposed it is to a downward move. And so this kind of a pattern tells you that there's more downside than upside, and that's what you want. Or you want to know that. That's what I meant to say. You don't necessarily want downward markets. Okay, this is the S&P 500, and there's not much to talk about here, really. Oh, what is that? Oh, wait, who threw that? There's no one here. Oh, am I talking to myself again? Never mind. All right, so the S&P 500, might as well talk to myself because I listen at least. A good listener to me. The S&P 500 is in a, looks like a healthy trend. The only problem with the healthy trend is, again, it is on lower volume all the way up. That you are seeing a pattern of higher volumes on the way down and lower volumes on the way up. And that's what you get out of this pattern. Not much else here. You know, again, it's just part of going through the indexes. Okay, small cap, rounded top, and we're going to talk about those in a minute. This one is just, what it's showing you here is that we're vulnerable and we're starting to show it. The Nasdaq Transportation Index, look at that, screaming like crazy. I'll put off an analysis until Saturday of that. Just wanted to show you. All right? Okay, now we're going to start talking about the science part, the classroom, if you will. And there will be a quiz at the end. And as a matter of fact, if you fail your quiz, we have capital punishment here. All right, this is a CRB of it, Index of Commodities. Now, notice again what we saw in the Nasdaq. We see a one move up, a sideways pattern, a downward sloping flag, and we see another move up and a downward sloping flag. Now that tells me, and that should tell you, that we're going to see a roughly equivalent move up again as soon as it resolves its flag. And I'd be anticipating that. We've talked about commodities as being the play, and there's a long bull market ahead. There really is. The flag serves a purpose. It gets people uninterested, and that's the purpose of the flag. Gold is in a massive bearish rounded top, and we're going to talk about that in a minute, because you can actually estimate once it breaks a rounded top, once anything breaks a rounded top, what's the target? Where's it going to go? Where do you close out the trade? That's the science of investing. You can actually hit a target if you meet certain criteria. We're going to show them to you right now, or coming up. Okay, silver is actually, I've drawn it much differently this week because, let's face it, there's an art to this too. You know, you have to identify the right pattern, or you might take the wrong action on the pattern. This one, I think now with a little bit of additional time, is basically a big flag. And I would estimate that, and it says bullish above 30 and bearish below 22, this is a pretty good buying opportunity potentially, especially if that burst up in the beginning of the year, or the beginning of this yearly chart, is repeated, and it will be. Okay, Costco now, look at that, rounded top. We talked about them last week, how they are everywhere. Now, rounded top is important because it's like throwing a ball up in the air, like a parabola. You know, you kind of do this, a slowdown of the interest and an increase in the disinterest or the sellers. So, you know, that's what causes a rounded top. It's no different than throwing a baseball in the air and seeing it do its little curve and down. But the thing is, there's a rule of thumb, and I mentioned this a week ago. I think it was a week ago, that actually you can estimate where the next move is going to be. And once it breaks down, the rule of thumb is, and I've written it on here so you can refer to it later. The rule of thumb is the distance between the top of the dome and the horizontal red line is the target. And you look at Costco, drew a blue box around the target, looky. That's where you should have taken your money off the table before the table took your money off you. Crude oil, we see the same exact thing. A burst up and then a sideways pattern consolidating, followed by a burst up. Okay, I'm going to ignore that because there's no one here. But where did that come from? Ace. Oh, jeez, he's been doing that again. This is dog. Oh, forget it. Anyway, crude oil, you see two bursts up, followed by consolidation pattern. And because the second one is downward sloping, it gives it some opportunity to actually break up. Now, I'm going to give that a little bit of a doubt here because of shale oil, but this is the way the chart pattern would read. If it starts to break down from some kind of support level, all bets are off. The agriculture fund is an interesting one because it is first a parabolic uptrend followed by a bull flag. Why is it a bull flag? Because it is descending and is more likely to be a continuation of the rally in agriculture. Food prices are going higher. Everybody but my friend Mr. Powell at the Fed seems to know that. I do because I eat food. Ace knows that because he hates his food. The next one, base metals fund. This is nickel, dime, copper, lead, tin, aluminum. Again, triangle consolidation is typically bullish. Triangle occurs when highs are below highs and lows are above lows, such that the range tends to compress. And those tend to be continuation patterns, very favorable in general. They tend to be really pretty good patterns to rely on. They tend to go in the direction of that preceded them. So they're very high probability. All right, FedEx I've had before as a rounded top. It's not. You learn that with additional time, and that's the thing. You have to be open to new information as it comes along. You can't get stuck on one view. It's got to be this. And I was kind of stuck on that. I thought for sure that this thing was in a rounded top, and then it kind of started to rally. Well, if you now take the additional information of several more weeks of trading, you now see that it's more of a sideways flag. It could break up, it could break down. We'll see. But me, I don't know that I would be all too thrilled about buying it if it broke higher, because you can't buy you can't buy low. So it kind of makes it not valid. This sort of, anybody buying it up here upon a breakout, gotta get out of it awfully fast because this thing, it's value. Platinum also parabolic uptrend, triangle consolidation. Already broke up from the triangle, and sometimes you can have them be real short, sometimes real long. It depends. So Palladium, same thing. It broke up, and it's on its way. Now, the reason that I look at patterns like these is that they tend to have a bearing on some of the other trends that are going on. For example, when metals and building materials and inputs, crude oil, are going up, so are prices. So are prices to build, to eat, to transport, to do whatever the hell you do. And right here, platinum or palladium is a major factor in, I think, in EVs, which are now all the rage. So looks good to me. Nike, same thing. We had that recently, and it's just a parabolic uptrend, consolidating, followed by a sideways consolidation. Remember, things do not go straight up. They stair step up, and you might be stuck in that stair step like for months. Sometimes the consolidation lasts for months, and it can kill you to death of boredom, kind of like watching me. Ah! Oh. wherever you were, wherever you were. Jeez, between the tinnitus that I got from last week and that, and the pies in the face, I'm lucky that I'm even alive. Anyway, forget about that. Nike's in a parabolic uptrend followed by a sideways consolidation. Again, it could break up. Okay, it could break higher. But all bets are, it's so hard to buy low, sell high here. You can't. So this is one I really wouldn't go chasing unless you chase it for like 15 minutes. That's about it. UPS, same thing. It's now neutral. I had it as a rounded top, but it's not. It's in a sideways pattern, and so it may break either way. And we have to continue to watch that on a daily basis. Now, this part is really neat. This is the science part right here. All right. Now, Procter Gamble, we've mentioned before as being in a rounded top, and lo and behold, it was. That one was right. Got that one right. Now, the interesting thing is a rounded top. The distance between the dome and the horizontal red line, in this case, is $10. So it breaks 125. 135 is the peak. 125 is the horizontal line. Once it breaks 125, your target is exactly that amount, $10. So you have a 115 target, or I'm sorry, 125 target. It started 145 to 135, and now you have a 125 target. I drew a box around it, and looky. Take your money off the table before it takes your money off of you. I mean, sometimes there's true science here, and that science can get you right there. Target also, see this one we questioned last week about real estate. Yeah, I know Ace. Dog food prices are going up, and they don't appreciate it. Anyway, we've got, I mentioned that Target was kind of looking stronger than I expected, and it was actually in a descending flag, a bull flag. And here you go, it broke up, broke higher. It circled, got an ellipse in green to show you that. But, very often the move that preceded it will be equal to the move that succeeds it. Very often. I don't mean to imply that it's going to happen this time, but very often it does. Again, you have to buy low and sell high for it to happen. Once you buy high, it's not so easy. Walmart, attention Walmart shoppers, here you go again. We've got a rounded dome, and look at that. The rule of thumb works on this one too. 152 minus 140. That's the distance between the top of the dome and the line, and that tends to be our target. Once we break below the line, we expect to make, we're looking at 12 points, roughly, plus or minus, in many cases. I shouldn't say it happens all the time. Please don't take it that way. It's just that there is a science to this that holds up a lot of times. Walmart, Procter Gamble, those are big companies, all right? I didn't manipulate these. So there's a point right there where you can use a pattern like this to make the profit and know when to take the money and run. Take your money off the table before the table takes your money off of you. All right. And with our last chart, we're going to talk about Tesla. We're going to talk to Elon Musk. I don't think he's talking to me anyway. And it's close to 420. You know what he's doing right now. Anyway, Tesla had a parabolic uptrend, the great hope stock that it was. And look at how much it broke down already. The Nasdaq is only down like, 6%. And Tesla's down like 25. And it was Tesla was the only stock to actually go up, last October when we thought everything was about to crater. And right now, like the canary in the coal mine, right now, it was down $20 today. And if you then extrapolate that the move down, when it comes, might be equal to the move down that preceded it, which it might, you get a target range of for Tesla holders. And being in a bubble is nasty. The average loss, from a bubble, from peak to trough is 85%. and that's happened to Bitcoin about 6 or 8 times. So it's a regular occurrence. Most people don't have a stomach for it. So with that, we want to do our learn and earn, and I'm going to ask the question right now. What is the difference? How can you tell a flag is a bull flag or a bear flag? And if you can answer it as this is posted and be the first to do so and be a subscriber, a $50 gift certificate will be on its way to you. Anyway, I want to say thank you, everybody. Today is April 7th. I hope you enjoyed the education, information, and never be misled here. And if you would like and subscribe, you're going to get more of this for free. How can you beat that? Anyway, thanks for tuning in. We'll see you next Saturday.